Good. So the net profit, we went back to the retained income note where we calculated it, and there we got a figure of 693,900. That I've got to divide by the average shareholders' equity. Now, if they tell me average, it means I've got to take last year's plus this year's, get an answer and divide that by 2 to get to the average. Average means the average between two figures. So I must go and look for last year's figure, and I must compare that, or I must add that to this year's figure. So if I go back, shareholders' equity, I just calculated last year, so I'll use whatever the total is I got previously, plus last year's of 731,500. Get a total for the two, divide that by 2. So last year's shareholders' equity was 7,868,600. 7,868,600. I've got to add, or that was this year, I've got to add last year's to it. Last year's I'll find on the balance sheet, and last year's was 7,341,500. Add the two, get a total, and divide that by 2 or multiply it by a half. So whatever I get as a total there, I'm going to divide by 2. So if I add 7,868,600 plus 7,341,500, get an answer and divide that by 2. That should then give me 7,605,050. So it's 693,900 divided by now this new total, which was 7,605,050, and that answer I must then just multiply by 100 to complete the formula. So times okay, let's just complete it. That one also should have been times 100. Right. So if I do that, take 693,900, divide by 7,605,050, get an answer, multiply that by 100, it will give me 9. We calculated a percentage. Every time we do this calculation where we divide one with the other, the question also told me to do the calculation of the return on average shareholder equity. It is a percentage, so to remember to put the percentage sign in as well. So that gave me the third one I had to calculate, which was the ROSI. I think it's a bit okay. So now I can move to 5.2.5. The shareholders are satisfied with the improvement in liquidity position. Quote 3 indicators. So I need to look at liquidity indicators and quote them with figures to support the statement. Now the liquidity, let's just go back to my list of formulas. My liquidity figures is current ratio, asset test, and rate of stock turnover, or you can use number of stock on hand. So we're going to look at those and see if they improved from last year to this year. So let's go and get the information that gives. Let's go down. The current ratio, last year it was 0.7 to 1. This year it's 1.8 to 1. So last year, remember what this ratio is? It's current liabilities in relation to current assets, current assets in relation to current liabilities. So last year, we actually had less assets than liabilities. So last year wasn't very good. So it improved very well from 0.7 to 1 to 1.8 to 1. So make sure when you do the answer for something like that, you've got to show the indicator, and that was current ratio. So on your answer, you'll put current ratio. It improved. Say if it improved or decreased from last year's, and then give what last year was. They want figures, so don't just say it improved or whatever. Last year it was 0.7 to 1, so 0.7 to 1 to this year's. This year it was 0.4 to 1, 0.4 to 1. So that is the first one. I have to give 3. So the next one I will give is the one I just calculated, the asset test. So the asset test ratio is my second liquidity ratio that I'm going to quote. What happened to the asset test ratio? Well, when we calculated it for this year, it was 0.991. So let's see what was last year. Last year it was 0.4 to 1. So it also improved. It improved from 0.4 to 1 to now 0.99 to 1. So you can also say with the asset test, it improved from last year, where it was 0.4 to 1 to this year, which we calculated as 0.99 to 1. The third indicator we're going to look at, we can now either look for, let's just go back to our ratios, the asset test we've got, the stock turnover rate, number of stock on hand, debtors and creditors collection period. Those are the liquidity ratios. So any one of those that they give me, I will use. And the next one they give me is the debtors collection period. So I'll use the debtors collection period. Creditors did not change. So you can't really mention the creditors period. So those first 4 are the liquidity ratios that we must pick 3 from to mention. Now the debtors collection, that means how long does debtors take to pay us. Last year it took them on average 39 days. It came down to 28. So with the debtors collection, we want it to come down. The less, the better. So it is also an improvement. So the debtors collection period improved from 39 days to 28 days. So we can put that one in as well. So it's the debtors collection period improved from, let's just see, it was 39 days to 28 days. 39 days to 28 days. So when you study this, make sure you know which ones are liquidity ratios, solvency ratios, etc. So that if they ask you, in terms of liquidity, why should they be satisfied? You can mention any of the liquidity ratios. It's the current, the asset test, the 2 stock ratios, debtors collection, and creditors payment. So those compared to last year, give your figures, say if they increased or decreased. The 2 ratios, we want that to get the left-hand side to become more. uh, than it was previously. With the collections, we want the days to become less. So they should be fairly satisfied, the debtors collection as